We think the entrepreneurs are the rock stars. They're the ones who are, we build a portfolio of 30 companies. This entrepreneur is all in on one company. It's really a bet on the people and can they execute against this big vision that they have. You have to be willing to take risks and you have to be okay with failure. Now that's a hard thing to do when you think about failure, but without failure doesn't come reward. If you're not failing, you're not taking enough risk. I think what crypto looks like in 5 years will be very different than what it looks like today. So I think it's this super interesting place, but it's madness right now. It is crazy on so many levels.
Welcome back to another episode of the Change Officer podcast, brought to you by our friends at Poddster.com. If you are looking to start your own video podcast, but you don't have enough bandwidth to deal with everything that goes into the podcast production, hit them up. Their team at Poddster will be happy to support you with consultancy, tips and tricks, and any part of video podcast production. Today I have something special for you guys. My guest is coming from USA. He started his career in the late 80s in a WordPerfect Corporation. Google WordPerfect Corporation if you don't know who they are, because they are huge. After that, he was put in charge of a $300 million in-house corporate venture fund at Novell. In 2002, with a group of friends interested in enterprise software companies, he founded Pelion Venture Partners, company with a top 10% track record of VCs in USA, the strongest market out there. Almost 20 years later, he is still at the top of the game, pursuing next disruptive technology to invest. About current venture investment climate worldwide, new trends in tech startups, and how much entrepreneurship has changed in the last 30 years, I'm going to talk today with Blake Modersitzki, managing partner at Pelion Venture Partners. Enjoy, everyone. Hi, Blake. Welcome to the Change Officer podcast.
How you doing? It's good to be here.
Hey, it's really good to be here. This episode is unique. It's unique because you're the first guest in the Change Officer podcast that is not actually based out of the Middle East. And I think that's great because you're coming from Utah. You are managing one of the most successful VCs in the United States. You are backed by LPs from the region. And I think that our audience can learn a lot from people like you. And I'm really excited to talk more about your history, what you guys are up to, and strategies that you're taking, and just pick your brain on a variety of different topics when it comes to VCs, startups, investing, and in general, hear some interesting stories. So really looking forward to this.
Well, thank you. I'm excited to be here. I got introduced to the GCC back in 2015 and have been going there quite a bit. And it's a wonderful part of the world. And I've learned a lot and made some great friends. So I'm excited to be here. Awesome.
So you have a family history of entrepreneurship. Your dad was an entrepreneur, a farmer, true entrepreneur, actually. His dad was an entrepreneur. He had businesses, carpentry, right? And then his dad, your grandfather, was an entrepreneur, and he was running a fleet of ships in Prussia, right? If we collected this information correctly.
That is correct. Yeah, it started with my great grandfather. And not only a fishing fleet, but they had a harbor where they repaired boats. And then my grandfather was a carpenter, and then my dad was a farmer. So yeah, it's been fun to watch or to look back on the history of all of their successes in its own way.
So three of them, the family history of entrepreneurship, was this a burden? And a lot of expectations from you, or something that supported you?
I think it was a huge help because one of the things I learned is that risk-taking, success and failure go hand in hand, and that you can have dreams and you can pursue them. So when you add all of that together, it was it was a natural evolution for me, because I'd watched it happen. So it was, if anything, it was a great example. I never felt burdened by this. I always felt like, well, gosh, my great grandfather, which a 14-foot, so what is that, like a 10 meter boat? No, a 5-meter boat, out in the Baltic Sea. Like, that's a small boat. And those guys were going out there fishing for herring and all sorts of stuff. So now, it was never a burden. It was actually a great example.
Yeah, no, I can imagine, and a lot of lessons probably that were passed from generation to generation that came to you. And back in 1990s, you were working with Novell, right, and WordPerfect Corporation, and at the time you were employee. Right, you were not running your own business. Then later on, you switched to manage a VC. But at the time, you were in the front seat of what was happening and the whole explosion of software and internet. How was it like back then?
I look back now. I joke with my kids. The internet didn't exist. Online music streaming, online, like, none of that stuff existed. And I remember, like with WordPerfect, being able to bold and type documents and then print them off. Like, that was super revolutionary. I don't think I had a full appreciation for what the tech industry would become and what the underlying technology would drive across multiple industries. At Novell, I remember when we hooked multiple computers up to a single printer, and that was, like, really cool. And, today we I could print 20 of your printers in Dubai right now if we wanted to. So, it was fascinating, but I don't think I had a full appreciation of the entire revolution that would happen. I compared a little bit to the industrial age. If you roll back a century and we went from, horse and buggy to automotives, like, that was pretty revolutionary. And if you look at today, all of the infrastructure that came from, simply going from a horse to a car. So, and you can see that in a very shortened period of time with technology.
Yeah. Well, you can say that probably for any age. Nobody is really aware at the moment of what's going on. Only when you reflect back, you can say, wow, this was a ride. Right. And now, I mean, some younger generations who didn't have a chance to experience what was going on at the time are like, wow, like trying to imagine how was that back at the time, while at the moment there is so many things going on, it's almost normal, technology disruption, all of this vocabulary that is now established is like normal for young generations, right? It's funny when you look at it like that.
It's so true. I mean, think about it. My children don't remember a world that didn't include cell phones.
Exactly.
And I remember a world where cell towers didn't exist. And if you had a cell phone, you were like, 1% of 1% of the people. It just sounds like I'm really old as I talk about it.
No. Well, yeah, but it was just like, 15 years ago or 20 years ago. It was not that long ago at all. I love to ask people who had the privilege to be not only at that time, but on that place as well. You were in United States, Silicon Valley, Utah. You could, witness it firsthand. Were there any companies that you were sure that they're going to make it at the time, but they just didn't?
I guess I would answer it this way. When I was at Novell, I worked for a guy named Eric Schmidt, and Eric Schmidt was the CEO of Novell, and he was this guy was a visionary, and he left Novell to go to at the time it was a crappy little search engine company called Google, and back then in the 90s there were 15 search engine companies. And I remember thinking, that movie has already been made. You got Yahoo, Alta Vista, the list goes on. Why are you doing this? And I was just convinced that, Eric was, and I was working in Silicon Valley. He was going to Google, and it was going to be disastrous. Well, if you think about what Google wasn't a search engine company; they were an auction company, and like that vision that he had. And so, I went from, that company is going to fail miserably to going to be wildly successful in a short period of time. I remember Trilogy. I don't know if anybody remembers Trilogy out there in your listening audience. It was kind of the first, what I call Salesforce. And this thing was all the rage in the 90s. And then it just blew up. Today, I think it's a tiny little company in Austin, Texas, but it spawned a whole bunch of innovation. So even though the company itself was not successful, many people went on to start businesses after that. I was just listening to an Audible this morning. The guy who ran engineering at Trilogy became the guy running engineering at Facebook. So anyway, yeah, it's a great lineage of technologists.
It's it's that whole topic is really interesting. And talking to you left Novell that was 2000 something, right? To start 2002 to start a venture capital. Was it Pelion at the time?
Yeah, it was actually the combination of what we were doing at Novell and a small fund to create what is Pelion today.
Yeah. So, and talking about all of that craziness that was going on, Google, Facebooks, and all of these other companies that are now famous, but at the time were just starting. What was the strategy at the time of selecting where to invest when there was so many things going on? And like, how did you pick the companies that you would invest in?
Yeah, so you kind of had to look at disruption. And, I'll give you a quick little example of that. So, disruption is there's lots of companies out there doing things. One of the companies we picked was a company called Riverbed. Now, all they did was speed data up. But I remember the CEO, and this was the other thing, is you bet on people, the CEO telling me, we make data move faster than the speed of light. Now, physics tells us that just can't happen. But what those guys had invented was, if you know the way the internet works, you send data across the internet, it gets to the other side, the other says, okay, I have it, and they send what they call an acknowledgement back across the other side. And that's why there's latency, or it slows down. What these guys did is send the data, and at the same time they're sending the acknowledgements back across the internet. So now all of a sudden you get rid of latency. Something as simple as that was super revolutionary because they were taking advantage of the infrastructure. So disruptive technology, because speeding up data, Cisco had been doing that for years. Huge market, but then the team, these wonderful entrepreneurs that had created something. So when I take a step back and I look at what they were doing or what companies were doing, we always looked for disruption and how can you disrupt an existing market or a market that's coming online.
Looking for a disruptive idea, and probably back at the time, this whole the word of disruption wasn't that like overly used. Probably now it's almost you need to be careful how you use it, but recognizing such an idea, is that like a factual thing? You just look at the numbers, and it's a fact this is a disruptive idea, or it's not that simple?
It's not that simple because we're early stage investors. And so there's not a lot of numbers to look at. And so what you're really kind of betting on is a vision by an entrepreneur. And that vision is risky, it's big, it's hard, it's fun, it's scary, and it's exciting. And And so when you add all that together, failure happens a lot in early stage. And so, it's really a bet on the people and can they execute against this big vision that they have. And as an investor, we just believe in what they're doing and try to help how we can.
It's kind of a gamble. You can call it a gamble as well. Although probably that's not the word that you want to use, but it is gambling.
You know what? There's a lot of truth in that. And what I mean by that is like when you think about, I mean, even if you look at the GCC and you roll back 50 years and compare it to what it is today, the entrepreneurship that happened to build cities like Dubai, for example, the entrepreneurship that took place, to build the Transcontinental Railroad, from New York to San Francisco, like that was vision and grit and hard work, but people were taking risks that it was going to work. And so with risk, you're right. I mean, it's in a wacky way, it's gambling.
Yeah. Well, the venture capital game is a game of risk and reward, right? And it's a risky type of investment, obviously. But can you single out one example when you gambled, took a big risk and then won big time?
Yeah. So in 2009, there were 3 really bright students from Harvard: Matthew Prince, Michelle Zeitlin, and Lee Holloway. And they were built, and cloud computing wasn't what it is today. And the 3 of them had identified that security in the cloud needed to be fixed. And so basically on a business plan and the belief in those 3 entrepreneurs, we invested $800,000 in 2009 at I think it was a $6 million valuation. Well, those entrepreneurs built, innovated. The company went public in 2019 at a $6 billion market cap. Today, that company has a $25 billion market cap. And, Pelion owned about 20% of that company. So we had the extreme good fortune of, I think back then we had a belief that, look, they'll solve an interesting problem in the cloud around security. And then roll forward a decade later, 50% of your internet viewing, you're actually running through a Cloudflare system. So you and I as consumers don't know it, but the internet runs on Cloudflare. So there's a great example of we bet early on 3 really smart people and it turned out really well.
So when you now look back, at the time, you couldn't be sure that you couldn't see that coming. That's for sure. You were hoping that you're going to you win some, but not that much. But now, when you look back, what do you think what did draw you towards them? What do you think was that thing that clicked in your mind and said, okay, let's go for it? Was it people, or?
It was the 3 founders. Very smart, wonderful individuals. They're smart, they're great. You like to hang out with them. And we thought they were tackling an interesting problem, but you're right. I mean, if you look at the average exit in venture capital across the board is between $200 and $300 million. You're going to sell a company and that's usually what happens. But when we think about it on our side, we always look at it and say, can this company revolutionize something? I gave you the riverbed story. They revolutionized the speed of data, those things. But I don't think we go into it hoping that we're going to find these great multi-billion-dollar companies. But you always look for what is the tangible problem they're solving. And for Cloudflare, it was security in the cloud. and it's become a much bigger platform over time. But it's the intelligence of the founders that created that.
Yeah. What do you think comparing 20 years ago, technology was exploding. There was a lot of opportunities. People were coming with all sorts of ideas and raising a lot of money and making a lot of money. 20 years later, now in 2020, 21, do you think then the opportunities shrink? There is less opportunities or less problems to be solved, or still the opportunities are endless?
I think the opportunities are endless. And what I mean by that is, I mentioned, back at Novell where, hooking multiple computers up to a single printer was pretty innovative and revolutionary. When you think about today, you have artificial intelligence, machine learning, blockchain, crypto. You have all of these technologies that are being applied to different problems. I mean, think about just like self-driving cars and all of the benefit that we as consumers, but all of the issues and challenges that just got introduced. Technology inside the car, technology outside of the car, technology in the transportation industry. So I actually think that the opportunities are exploding because the applications are so much bigger. 20 years ago, I don't think people really thought about, I guess if you watched, Star Wars or the Jetsons or, flying cars, that was just something you watched on television. So I think they're endless in terms of where we're headed and what we're doing next. And then you can apply that to think about artificial intelligence in the healthcare industry. One of the biggest challenges for we looked at this really interesting company that is personalized medicine, and how do I solve the issue around a therapy for somebody who has cancer in London, Dubai, and Los Angeles, if they have the same characteristics? Well, artificial intelligence helps solve that problem because they can crunch so much data that you and I can have a better sense. So that's what I mean by innovation is endless.
No, I think you're absolutely right, and I agree with you with AI, nanotechnology now, quantum computing. The opportunities are just exponentially growing. What do you think are essential questions to be asked? So a bunch of people out there are thinking, well, what's the next big thing? I want to start a new company or want to solve the problem. But what are the essential, what is the starting point questions to ask when you're looking for a disruptive idea? Because we're all witnessing a bunch of, crappy ideas out there, or businesses that are just okay, yes, but on the surface, not really solving any major problems that can impact the humanity or that can impact completely the industry. What is the starting point? The questions that you want to ask yourself about your idea if you're looking for a disruptive idea.
Yeah, I think it's, is it a vitamin or is it a painkiller? If I break my arm, a vitamin isn't going to help me, but the first few days I need those painkillers. It's something that if it works, I can't live without. And you get this flywheel motion going. Now that happens kind of across the board. And it's also, is the market ready for it? Why did Facebook win, but MySpace didn't? Like asking those sorts of questions, I think while you're in the innovative mindset, if we're successful, people can't live without this technology versus, hey, this is kind of cool, but I look at smartphones today. It's these things don't. It's like the tech that's in them, and how easy that makes people's lives where they just can't live without it. So those are the questions that I always look for as an investor. and see the passion side of the entrepreneur on what they're building.
Yeah, you recently invested in a company. It's a online reseller, Overstock, right? That deals with cryptocurrencies.
Yeah, so Overstock is this great marketplace company, and they had created it's called a Medici. It's it was their corporate venture fund, and so we partnered with Overstock. And we now manage their corporate venture fund. And the corporate venture fund has a focus on blockchain and cryptocurrency. And there's about 21 companies in that portfolio that we're now managing. Really interesting. You know, a company like T0, for example, think of them as an exchange for tokens. Mm-hmm. So you think about the NASDAQ, the New York Stock Exchange, the Dubai Exchange. You know, companies issue stock, and then that stock is traded on that. Well, one of the challenges is there's latency. So a trade happens, but it takes several hours for it to settle. On the blockchain using tokens, you can trade instantaneously. And so companies can issue tokens like they can issue stock. So is this kind of the next generation of exchanges? Super interesting. Mm-hmm. So that's just one company in the portfolio, but that's what we're doing there.
That's interesting. Now, a lot of people are sometimes have some wrong ideas or misconceptions about blockchain and crypto, putting them together. It's two different things: blockchain as a technology, and then cryptocurrencies on top of that. Blockchain is definitely revolutionary as a technology. On the other side, crypto, and especially what's been going on over the previous couple of months or a year now with NFTs on top, this is like complete madness. What's your thinking on cryptocurrencies? Are they here to stay? What do you think?
Yeah, so I agree wholeheartedly. I think blockchain is the next really big idea around networking software. It's a really interesting networking software. When I think about cryptocurrency and I think sometimes if you're going to view crypto as money, I think when I think about crypto, I do believe that it's here to stay. I believe that if you view it as money versus an asset, I think it's an asset. You know, I remember here in the United States, you know, everything was built on what they called the gold standard. Mm-hmm. And, you know, and then the gold standard went to paper money, and it was backed by gold. And now, you know, the currency is backed by the U.S. government. And I think that's true kind of around the world with different currencies. Well, with crypto, it eliminates by country, but it's an asset versus money, I guess is the way I would say. And I think that's still, people are still connecting those dots. I think what crypto looks like in 5 years will be very different than what it looks like today. Because you're right, there's craziness and madness, and then you throw NFTs in there. You got Elon Musk that makes a comment, and the value of Bitcoin plummets. Like there needs to be some stability that's put in there. But you know, in the United States, you have professional athletes that are starting to take part of their contracts in Bitcoin. I have a good friend who owns student housing at various universities here in the United States, and he allows the students to pay their rent in Bitcoin and Ethereum. So I think it's this super interesting place, but it's madness right now. It is crazy on so many levels.
Yeah, no, definitely. I mean, we're all witnessing that. Maybe the initial idea that cryptos are coming, that you will be buying, you know, water and sneakers in the shop with crypto, is probably not going to happen. As an asset, as an investment vehicle, yes, probably. Whether it's going to stable is in the coming years, most likely. Whether it's going to disappear, that's almost impossible now with so much people involved. I recently talked to a startup that raised a certain amount of capital from a VC for the following, I'm not sure whether 2 to 3 years of operations. VC told them, look guys, you don't need all of this money in the year one, either way. We advise you to take a portion of that for the operation, and for the rest, you buy crypto. Would you advise your startups to buy crypto with your capital?
No. It's too volatile. They need that to run their businesses. But I think when you think about crypto, like you take the younger generation, and one of my business partner's son is he's in his late 20s. He's actually got a little pool of money, and he actually trades crypto. And so I think that there's, it's like anything else. When I think about technology, my understanding of technology is much better than my parents'. My children's understanding, because it's like this evolutionary. I think that the younger generation is going to be the generation that will carry the crypto to mainstream. And I'm excited to be a part of the ride, because we're obviously looking at things around crypto and blockchain for an investment.
Yeah, no, absolutely. I mean, a lot of opportunities, but with a lot of risk. So depending on your appetite, you should go for it or not. Pelion Ventures is in top 10% of VCs in United States based on actual record, not based on PR publications or just like you're actually based on your numbers. How?
Yeah, so Cambridge Associates, which is a firm in Boston that tracks all of this, we have to report, and our limited partners report to them, and then they're the ones who crunch the numbers and make the declaration. I think so that's why we lend there. I think the how is, it's a combination of companies. One is you have to be willing to take risks, and you have to be okay with failure. Now that's a hard thing to do when you think about failure, but without failure doesn't come reward. And so I had somebody tell me, if you're not failing, you're not taking enough risk. Now it works the other way. If you take too much failure, you're going to be out of business. And then I think the other thing is we have a strong belief on people. We think the entrepreneurs are the rock stars. They're the ones who are, we build a portfolio of 30 companies. This entrepreneur is all in on one company. And so, I think when you look at that, and then you have to have what I'll call, there's the science and the art. So the science is I can look at a bunch of data and make a decision. Well, early stage investors, there's not a lot of data. So what is the art? Can you look at it and have a belief in what these companies are doing? And then the discipline around how much money you put in. If you're going to lose money, limit that amount going in. If you're going to make money, pile money in. I mean, Cloudflare, by the time that company went public, we had over $100 million invested in that company.
Wow.
But I had a company that didn't work out, and we had $800,000 invested in that company. Just like, you have to be disciplined. And that's hard, because these entrepreneurs become your friends. And you have to look at them and say, look, the business isn't working. We can't give you any more money. Let's shut it down or sell it or something.
Those must be hard conversations.
You know what? They are. But I think if you foster a relationship of trust, where you just can have the candid conversation, removing emotion. Like I said, I've been doing this since the mid-90s. 99% of the time, those conversations are great. There are the 1% where they're not great, and then you just have to kind of figure it out.
That's just a reality. And I think that in most of the cases, startups and founders needs those kind of conversations, because they might be the only way for them to stop before it's too late. Otherwise, it's in our nature, especially if it's our baby and the idea that we are nurturing, that we will be going all the way to the end and potentially lose a lot more than if we just, stopped at one point and say, okay, this was it. Let's go for another run. Let's talk about the whole system and the ecosystem, and then the importance of higher education, the importance of universities who are shaping in the early days these entrepreneurs. You studied at Brigham Young University, right? Some of the alumni include Kevin Rollins, former CEO of Dell, right? And Aaron Scannard, co-founder of Pluralsight. How important was for you higher education and university that you attended? How important was, how much of an impact did it have on your career and who you are today?
I think it's wildly important. And I'll talk about a couple things. So if you think about, so I look at Silicon Valley back in the 90s. And if you roll back to when, Silicon Valley went from, apple orchards and peach orchards near Stanford University to the tech hub that it is today. It had strong universities, so Stanford, Berkeley, what have you. There were big companies, back then it would have been companies like Intel, Sun Microsystems, Oracle, a bunch of those companies. And then you had young entrepreneurs that were coming out of those universities that were building companies. And so, with that, you have guys like a Bill Gates or, guys who dropped out of school to go build their company. And I think that's a unique person. But I think higher education is extraordinarily important because, one, what you learn, but also the network that you create. The two co-founders of Google met at Stanford. The founders of PayPal met at Stanford. If I look at here in Utah, which is this unbelievable tech hub. So during 2020, there were during COVID, $30 billion in exits took place in the state of Utah. Companies like Symantec, Adobe, Oracle, Facebook, the list goes on, have big operations in Utah because they've acquired companies. And then you mentioned Aaron Scannard from Pluralsight, or Ryan Smith from Qualtrics, Josh James from Domo and Omniture. The list goes on of multi-billion-dollar companies that can all trace their roots back to universities. So Brigham Young University, the University of Utah. In fact, the University of Utah was one of the three universities that were part of DARPANET, which became the internet.
Wow.
So the innovation in what I'll call the Rocky Mountains has always been there. And oh, by the way, it's an hour flight to San Francisco. So it's shorter for the people in the Bay Area to come to Utah to snow ski than it is to go to Tahoe.
Yeah.
So
no,
we also have that attraction.
Wow. No, I think that's one of the most essential elements of creating the environment where entrepreneurship can flourish and where you're creating people who can, build this next big thing or next generation companies. How to build that ecosystem is a question. This region is young. It's amazingly progressive and fast. But there is still a long way to go to reach the stage of United States of America. What I think are some of the most critical steps in creating this ecosystem that is going to support founders, entrepreneurs to create big things?
Yeah. Well, I think I think the embracing risk and embracing failure. And what I mean by that is not everything is going to work. And so when I look at building big companies, I mean, Josh James is a good example. Josh James built a company called Omniture, which was a multi-billion-dollar IPO, which was then acquired by Adobe for several $billion. Well, Josh has had failure through his life as he's built different businesses. His co-founder, John Pastana, same sort of thing. So when I think about the region, look, there's great universities, but within those universities, like you mentioned Kevin Rollins. So Kevin Rollins made a big donation to Brigham Young University to create the Rollins Center of Entrepreneurship. So they actually teach you how to be an entrepreneur. And what that is not teaching you how to do it, but helping you discover if you're an entrepreneur or not. Because, it's like my dad. My dad was a farmer, There's just instinctual things that you do. You don't learn that, in a book, but you learn the characteristics. So I think those are the sorts of things where the region, how much of the universities are focused on entrepreneurship? How much of the region is focused on incubating startups, making that connection into Europe, into the United States? I think those are some of the things that I think the region has done a good job and continue to, but it's, it's in the early stages of that evolution that I think.
No, yeah, definitely. Do you go back to your university and talk to students?
I do. I actually teach a class at the university. I sit on the advisory board for the business school. My children actually go there. So I spend a lot of time at that university, and we hire a lot of interns from the university. So in fact, I have 2 of them this summer that are in the finance program at BYU, but it's all around entrepreneurship. So
yeah, no, I think that's what you're saying. That's definitely the way to go, and especially for students and young people to see alumni from the university who made it, coming back and giving them support and teaching them, like sharing with them lessons that they've learned that is of enormous value. Back in 2010, in one interview, you said that passing on the offer from Eric Schmidt was at the time was one of the worst decisions that you made. Now in 2020, do you still think that's one of the biggest mistakes that you made, or?
The short answer is no. Eric was great, and he still is. He's a wonderful individual, and he's who I worked for when I ran Novell's corporate venture fund, and he was great. He loved venture capital, and so I got the opportunity to spend a lot of time with him. And when he told me it was late 2001 that he was leaving Novell and going to Google, and then he kind of talked about an opportunity, and I remember thinking, wow, I think I want to go be a VC. And so I left, and he and I have stayed good friends. And, I had no idea Google would be what it had become, and it would have been a wonderful ride. But having said that, the last 20 years for me has been one of the most rewarding of my entire life. The number of great entrepreneurs I've met, just friends that I've developed. So at the time, I remember thinking when Google went public, wow, that would have been a fantastic ride. But I would have missed out on so much had I not come and done what I'm doing. And I think also, I don't know if I'd ever discovered that I'm a true entrepreneur, because we had to build this firm, and it's like building a company. And I don't think I would have had that opportunity had I gone to Google, because I'd have been working for Eric versus building it. So just an extremely exciting time for him, but I wouldn't trade what I've done the last 20 years for anything.
No, I'm sure you had the opportunity to take part in hundreds of potential Googles, and some of them that became almost Googles. There is this book from Ben Horowitz, The Hard Thing About Hard Things. building a business when there is no easy answers. What was the hardest thing about building a venture capital firm in US?
Probably convincing investors, so limited partners, people who invest into us as a firm, to take a risk on us. Because back in 2002, 2003, 2004, the internet bubble had burst. Lots of people had lost money. Why are you guys going to be successful? You're sitting in Salt Lake City, Utah. Nobody really had a sense for what Utah would ever become. I think the hardest thing was convincing investors to take a bet on us from a strategy standpoint. And now I sit here today, and those investors that did that back then have become very close friends.
Because you made them a lot of money.
Yeah, we made a lot of money. But I would say that was the hardest thing, is because without the capital, you can't make investments into great companies. And then I'd say probably the second thing is sitting down with a entrepreneur to say, it's not working, and we're going to have to go in it. Like that's really hard. And because, it's having an effect on people's lives, their psyche, like all that kind of stuff. So I'd say the raising of the capital was really hard back then. Now it's much easier, but it's still not easy when you have to have the hard conversation with the entrepreneur.
Especially when you develop a relationship with them, which is, I'd say, especially today, most of the startups are looking for true partners, not necessarily capital. At least in the region, capital is not the problem. The problem is the lack of probably solid early stage ideas, and on the other side, the lack of true support and smart capital, right? Capital where you're getting the partners on board as well, who are actually going to help you, build that company. So very often you end up developing a relationship with your partner, right? So at that point, when you need to tell them that it's maybe over, it's almost like breaking up with your better half. So
it's so true. And, you have, not only do you foster a relationship with the CEO, but kind of his management team. You get invited to, holiday parties, what have you. So they get to know they know my wife. And so sometimes wives get to know each other, children go to school together. Like the intertwining of your relationship runs pretty deep. And, I have one entrepreneur that, I had all those sorts of things, and his idea didn't work. And I remember talking to him, and when we finished, I'll never forget that he said, what, at the end of the day, you and I will always be friends. That we're going to separate our personal relationship with what didn't work. And I really appreciated him telling me that, because, it's true. You don't have to stop being friends just because the idea didn't work. Lots of ideas don't work. So yeah. I've always tried to keep that perspective in mind.
No, absolutely. And especially when you reach the stage where it really doesn't work. I mean, we just need to be real and be smart about it and pull the brake where we need to. You're making a lot of analogies in your talks, podcast speeches with sport. And then once you gave an answer when, what is the ideal individual that you want to have in business. You compared it with a baseball player, one that can play first base, second base, and basically cover all of the roles. Are you into sports? Do you like sports?
I do like sports. I enjoy football and basketball and baseball and soccer, or I guess football. in Europe and in your part of the world.
Do you follow basketball?
I do follow basketball.
What do you think about Nikola Jokic?
I think he's good.
Is he going to be an MVP?
I think he could be. When you think about the reason I make some analogies is success is not necessarily an individual, but it's a team sport. And that's why when I look at companies, when I look at team members to add to my team, I kind of look for great athletes. Sometimes they're great athletes in sports, but that mentality. So that's probably why, and I enjoy it. I'm a sports fan.
No, definitely. I think that's the analogy between sport and business. There's a lot of synergy actually, and a lot of lessons that you can learn from sports. Just a couple of random questions before we wrap up. Curious about what you think about podcasts as a new, especially US is obviously ahead of a lot of other markets, but here it's picking up. There is more podcasts. They're being used in a variety of different ways. What do you think about podcasts as a business in general?
I think they're great, and I think it's a new medium to content. So look, you get to listen to some interesting people that you would not be able to ever listen to. I think they are entrepreneurial in the way they do it. It's the new medium. I mean, my wife still reads the newspaper because she likes the feel of it. But I talked to her the other day, and she talked about listening to these podcasts, and I was like, wow. So I think they're great, and I think they're here to stay, and they'll only get better over time.
And when you see the contracts that some of these podcast hosts are signing, they're ridiculous. Like Joe Rogan started the whole chain of events when he signed $100 million contract. So let's see. It's definitely interesting. And there are actually some of the podcast platforms that are now even raising VC money. That's an interesting region. There is one actually that raised VC money. So it's interesting to see how this is going to develop. So you're from Utah. You love Utah. Based on what I could understand from all of the chats that I've listened and you speaking, someone coming to Utah or Salt Lake City, what would you recommend?
Spend time in the outdoors, great restaurants, great theater, terrific people. I have one of our analysts just moved here from Cincinnati to work for us, and he's so excited to go to Southern Utah, to Zions Park and Bryce Park. He's excited to spend time in the mountains. So I think it's an unbelievable place to live, and it's easily accessible from anywhere in the world.
Is there any specific restaurant that you want to recommend in Salt Lake City?
Yeah, it's called Bombara's. Down in the Hotel Monaco. It's a fabulous restaurant. One of my wife and I's favorite. And then Main Street on Park City. You can just walk up Main Street. Every restaurant is great.
Awesome.
There's a place called Painted Horse in Park City. Try that out.
All right. I'm going to make sure to stop by and let you know when I'm in town. Blake, thanks so much for the time. I really enjoyed it. And I think that the opportunity to talk with someone coming from that part of the world and share stories with a Middle East that is, on a run towards greatness is unbelievable. Thank you so much for coming, man.
Thank you for having me. Have a good day.
You too, Blake. Take care.